Good day to you, my trading friends. It is Friday, February 26, 2021, and your final cherry bomb trade of the week is here today. And so I wonder, can you be bullish on Peloton after the drop it's had recently? And if you don't know what I'm talking about, we'll take a quick look at the charts soon, but let's do a brief overview. We're looking at Peloton, who has an IV rank right now, you can see above me as 17. It's relatively liquid at 3 drops out of 4 over here, you can see that. And because of the low IV rank, we are going to do a debit spread. And because we tend to be contrarians, when something goes on sale and has come down quite a bit, we're looking to take that contrarian position and benefit should it recover. So, if you're interested in seeing how to position yourself to profit if Peloton should bounce back, then hop on in with me to Thinkorswim. Hi everybody, my name is Neil and this is Option Theory. I'm so glad you could join us. What we do here is we build out trades using our simulated trading and Thinkorswim so that we can take the fear out of trading. I hope you'll join us by hitting that subscribe button and ringing that bell because the trades we put on are time sensitive. For those of you long-time subscribers, welcome back and here we go. On the screen here, you'll see the chart pulled up for Peloton, and you can see how it has peaked at 171.09 and then just dropped precipitously. And according to the email that we receive, more on that at the end, so stay tuned on the end on how you can get the same emails and the trades that we get in your inbox as well. So anyway, this is a 2 standard deviation drop, so that's pretty big. And not great if you were bullish. If you tend to be the trend is your friend person and you think it's going to keep going up and you bought, then you'd probably be sad at this point, right? So how can we position ourselves with defined risk so that we know how much we can lose? Well, we're going to do that today. Let's head over to this Analyze tab. Let's go to Add Simulated Trade. We're going to be in the April 9th weekly expirations with 42 days to expiration as of today. Remember, that's February 26th. I know sometimes my videos, they get views way back, and one of the SPY trades I did in June still gets lots of views. I'm like, it's a long time ago. Those options are long since expired, right? But anyway, on the call side here, we're looking, and the email trade that we got said, buy the 113, sell the 115. For those of you that are new, right, you're going to want to left click on the ask for the 113, hold the control key down and left click on the bid for the 115. That's buy and sell. What's nice now is Thinkorswim actually uses the words buy and sell so that, and I don't feel like that did that when I first started this. But anyway, buy and sell these two strikes. And we're looking, so that's $2 wide. And the price that they're looking to charge us, we'd have to buy this trade, right, is 93 cents. And because when you buy a trade, that's how much you can lose, because the value of this trade or this contract, this spread, can go to 0, right? Or it could go more than 93. That's when we profit, right? So the most you can lose is if this goes to 0, right? Yay. So if you can make 93, what can you make? So if you lose 93, what can you make? You can make $1.07, right? Because that's the width of the spread. Add $1.07 and 93, you get your $2. Yay, that's how that works out. But what's the probability of us making any money on this? So let's head to the risk profile. And now we're looking at the price slice set to break even at expiration. And make sure that you've got your date up here set to the same date that you see in this bottom left corner. That's April 10th. And then you can set your price slices to break even. And then I choose the turquoise at expiration. We're looking at a 46% probability of landing on or to the right of this gold price slice, according to Thinkorswim. You put this into Tastyworks, and let's see if I can get that pulled up. Oh, look at that. It just timed out on me. Well, yeah. Okay, I'm not putting my password in on camera, so let's go back here. And there we are again. All right. So it was 62% probability of us getting 50% of this trade. And I believe a 49% probability of profit, according to Tastyworks. Either way, we know that we're taking a pretty close to 50-50 shot. And what I would, I guess, call your attention to, because I feel like there's a lot of people out there in these, Facebook options groups that will tell you, oh, buy your calls, unlimited profit potential. All right. So let's say that we bought the 113. Okay. you'd have to spend $1,275, right? And let's go take a look at the probability of this profiting. Yep. So you're looking at a 32% probability of profit on buying that 113 call, and 67%, well, it's almost 68% probability of you taking a loss. And what could you lose? Maximum $1,275. That's a little bit more than the $93, right? So then what if we took this up to the 115 or even 116, buying out of the money? Here it's $1,140, and your probability will be even lower. So I hope that helps illustrate why it's, yes, we define our profits, but we do so and we get significant improvement in our probabilities. So I'm going to click that buy. I'm going to control click that bid, that sell on the 115, go back to where we were. And here we are looking at the same trade. I'm going to right click this trade. I'm going to choose confirm and send. We can see here that we make the 107 with a 62% probability of making 50, let's call it $52, 53.50 in the next 42 days. We could lose 93 should Peloton continue on its downward trend. $93, okay, I can sleep if that happens. I'm not thrilled about it, right? I don't think anybody's excited about it, but there is the trade that we're looking at. I wonder what you think. Is this a trade that you're going to put in? Is this a trade you're going to pass for today? It's going in my working orders. We'll see what happens over there. We got a few trades that need to be managed today. I got that going on today. And look, our deltas are relatively lower again. This one's not going to help. It's going to give us some positive delta, but that's all right. I'm okay with this amount of delta right now. Okay, everybody. If you made it this far in the video, I give you a thumbs up. My subscribers, I know you're probably dipping at this point, and so have a great weekend. But if you're new to this channel and you want to know how to get the same emails that we get with the trade ideas, stick around. It's not hard. Head on down to that description box. You'll find a bit.ly link. You click that bit.ly link. It's going to take you over to the MailChimp sign-up page for Tasty Trade. Perhaps you heard of them. They're a great little financial media company. Well, you have several email lists that you can sign up for there. The one that we use is the Cherry Bomb Trades, although I have subscribed to all of them, I believe. The Cherry Bomb Trades come to your inbox very early in the morning here if you live in the East Coast of the U.S., and it's 5 days a week, but 4 of those days contain trade ideas. I think Monday's motivation day, if you look at it that way. That's the way I see it. So we do those trades, plus hopefully viewer-suggested trades on Monday. So if you have any underlyings you'd like to see traded, maybe if you're like, I'm wondering about this company, and then you could send me an email, go to optiontheory.com/contact, or you could just leave a comment in one of my videos with an underlying, and we can compare what trade ideas we came up with. All right, everybody, thank you so much for joining us. I do hope someday you'll hit that subscribe button and ring that bell. We're here for you when you do. Until then, happy trading.